Yeah, I didn't know you were yet. Sorry.
Yeah, no, you're good.
Okay, so for the add a way to add another EMA cloud would be to set just the two EMAs. You can set them to the same color, right? And whatever you want your cloud at, and you'll have the exact same
Yeah,
setup, right?
EMA cloud's just two EMAs with a fill. We could probably add another one if it's necessary, if there's an actual demand for it. But
Yeah.
I mean, as of right now, that's a pretty easy fix. Plus, if you're having three EMAs on plus your cloud and all those anchored VWAPs, that's be a
You got
little
a lot
chaotic.
going on.
Yeah, you
A
kind
lot
of
going on.
lost the strategy.
No, it won't change colors on flip.
I don't think
Well,
our
but
our, our cloud does it either.
no, it doesn't. But what you can do then too, like, is um, you can run it where you have them different colors, and then you can just see which one's on top or the bottom, right? But this is stuff. If there's like a huge demand for more EMA clouds, depending on what it does to load times, that's something we can definitely look for updates. Let's go Kowalski. Um, okay, what was the other one? Yes, so the Tick Plus is going to take a while to load. It's doing a crap ton of calculations, right? So even Three-Legged Goose sometimes does have a little bit of a load time. But if you notice, once it's loaded, you're good to go, right? But something it's going to be a common occurrence with some of these loaded indicators. It just takes a while to load. Um, it's one of the benefits of not having a ton of crap in there is they load really fast. But once it's on the screen, there's no lag or anything in terms of updating, loading, etc.
We see like spy and maybe another ticker from today replayed on the indicator. Yeah, definitely. We
Okay,
can only
so
do one time frame though at a time. That's the only problem with the replay.
yep. Um, Mano, you have your Tick Plus then on um your chart. You need to bring it to a pane below, or if you're a free user, open up another tab and run it solo. Does that make sense? So you can just go in the bottom right corner. Do you want to show them really quick on the screen, Sig?
What am I showing?
Just go to the tree, the object tree, and how you
Oh
can
yeah,
pull indicators from top pane, bottom pane.
got it. Yeah. So you can either do it this way, where you have your object tree in this bottom right corner, and then you can just drag and move things. So if I wanted tick plus above, I could just throw it onto where all of our uh, candles are, or I can just drag it below, and then it'll be down here. You right click on the indicator as well, or anything for that matter. So if I wanted our three-leg goose below, click on any component of it, and then go to move to, and then say existing pane below, or if you want it to be in a separate pane, just new pane below.
And that's also on TradingView side. Sometimes you'll just get errors where things load into weird spots.
Yeah.
Just
You
easy to flip it around.
you
So,
can also just drag the indicator. So if you click
yep.
left click and hold and then pull it into the next one, you can just pull it into the pane below. Same way to get it out. Market
What
sync
was
is
that?
this. Sorry, Mario, do you want to take most questions and then I'll just answer? I don't want us to talk over each other. What do you want to do?
No, it doesn't much matter. I mean, you can do that. Yeah, so just all of this stuff can just right click on. This is probably actually good to walk through. All the alerts are so like we have alerts for so much stuff you can set that the alert panel does get a little confusing. Um, But for the market sync, we can have it set alerts where you get a trading view alert, just like you would set an alert on a static line for a crossover, um, for the color switches. So it's nice to just easily, yeah, right click, add alert, and then
Signal
set your
line.
condition. Yep.
And then you can just put whatever message you want, like sentiment change or something like that.
Yep.
And then you want to do it once per bar close, I would assume, so that it stays on there.
Do you want to click on the value under conditions as well? Because I think there's a ton of options for value. Yeah, so we can set it like just a ton of stuff, even more so. So you can really fine tune each alert. It's looking at like Nicey Spy and then what do we want to pull from? You can pull from the Tick Plus, and I
Yeah,
think
and
it'll give
other
you
indicators
more.
as well. But
Yeah.
so you can have like multi-conditional. Interesting. But yeah, you're just pulling up the signal line, and that's just letting you know when all the exchanges have a tick themselves, and we're tracking the tick on all of them. And when one of them is out of sync, we know that the market is no longer moving with us as a whole, and that there might be some sort of divergence there, and we want to play that divergence, or we don't want to be in the market in that divergence. Either way, depending on direction, right? So if everything's green and you're good to go, then you know that you can have more risk on in your positions because you have your momentum candles printing green. You have the market also printing green. So we went from a red to a gray, which is neutral, to our green. So now you know you have full market support, participation, and support in this movement, so you can stay within it, right? So that's basically what it's letting you know, and you're gonna get more and more used to that. Um, but I mean, I think today was actually a pretty good example of some pretty solid scalps, or even positions that you could have would have probably been scared to get and gotten out of. But like on all of these pullbacks, even on just like this, we got one red candle and it was immediately taken out as just a gray next. Like I usually wait on, I won't play off of a 3 minute red. I'll play off of a 15-minute red, or I'll play off of a shift from gray to then red. But it needs to have tick follow through. And I knew that we were already at our high tick here, so that we were going to push down regardless, right? Do you guys get me? So that if we're already up at 1,000, there's not really much more room that we can go. Same thing for when we're down at negative 1,000. So if we're pushing down into a bullish EMA, or our trend EMA, the 13 or the 20, whatever you prefer, we know that price tick is going to come down. We're going to get our low, and then it's going to push back up. So that's just giving you your entry. So even though we printed a red candle here, if you're paying attention, you know that this is just going to be your zero test. So if we get a rejection of zero and then we get a close above or below, like that's what we're going to be depending on our direction. Like you don't want to play it off of just one candle. So we have that downtrend in price. We have two red signals that print, and they print actually on this candle. So you actually could have caught this move to the downside if you wanted to, but I mean, let's be real. No one's doing a 3 minute scalp on 3 minute candles in here. And if you are, good luck. But like these two candles here would have printed for market sync, and then it would have gone gray to tell you that the market has some divergence and that some symbols are starting to curl up, whereas we no longer are fully bearish with amongst all the exchanges. And then we get our green prints, and we see that tick also recovers our zero. We push above, and then we're able to hold. So like it's just like the little details that you'll start to notice.
There was I think Adrian, you caught this today. Maybe not.
This
There's
area
like
was
some
also one that I
really
was
nice
talking about.
retraces
Yeah.
with like green. Oh, it was the one right before that actually.
Yeah.
The markets, the momentum kept
This
you in the
one?
trade really nicely.
Right here.
That retrace before the push up.
Oh
So
yeah,
at
no, I'm pointing.
1321, yeah.
Okay, 1321. Do you have a image of it?
I can find it.
That's fine. What just happened? Oh, we dragged this down. Got it.
Here is a picture of Adrian's.
Hey. Okay, so 0.5 as well.
Mm-hmm. But there's just like all day. So I'm glad that you guys are starting to notice that and really kind of embrace the momentum candles.
Yep. Hopefully you start utilizing tick the way that I've been trying to show it on stream, which is these downtrends. So this, I was trying to talk about this earlier on stream. What's going on here? Oh, okay. Okay, sorry, just wanted to make sure that I got this done. So, you can track the highest highs or the low, in the lower highs on your tick to get a sense of trend. So we could see that, first of all, we had, short-term supply here off of these wick highs that we had to get through. So we knew that there was going to be some tension here. We also had some right at our top as well. But you can start tracking these highs and just put like a sentiment line on it, right? This is all I would call it, because we're not playing a breakout, but we're just trying to track to see if, gauge what the market's doing and what's the strength. Are people still buying? Is there more selling than buying? Is there less buying now, but still like not too much selling, but just less of something, right? So we're just like going down. We're still bullish, but there's a clear directional shift where we're making lower highs and we're starting to not be able to, have full candles close at our bullish levels, I would say. And then we get that shift, and push down and immediately kind of see that downtrend forming. And you can also see like a potential push up, right? Like someone's trying to buy into this, but there's more selling pressure on all of these wicks. So there's a potential pop, but the overall move is still down. So I usually track the tops of my candles on tick, so you can get a pretty good sense of when things are going to happen. I would
So a
make the
couple
screen display
questions. Yeah, there you go.
for which component. I listed all of my settings in 2TG the other day with screenshots, but I can do it here as well, no problem.
We should get into quad momentum a little bit too. So in the settings, the do not fill candle, that there's really only three. There are only three options that quad momentum can print, right? Either all the metrics are green bearish, all the metrics are green bullish, or they're not a green, right? So to simplify it, I made my candles hollow. You don't have to do that. You can select the fill candle when not inactive or not to run your own um, candle color behind it in a different color for quad momentum. But we're just saying all the metrics that we're scanning for are either bullish, bearish, or they're not all a green. All right, so what can that tell us for trading when we see something go from, say, like a green to no signal, right? Well, obviously, one of those metrics is disagreeing. So how can we trade that? We can look at that as a little bit of exhaustion. We can look at that as a counterparty being a little bit more aggressive, right? Like what would be a condition that would print a gray candle? Right. Well, if we have tick moving up, Vold moving up, price moving up, but advanced decliners is moving down, we don't have full like congruence. I think that's a word. There's not full congruence between all of the metrics. Right. So what does that tell us about the market? Well, something is a little bit out of sync, possible reversal, possible exhaustion. We are no longer in a strong trend, right?
I mean, they look pretty good, chicken. The only thing that I've got different is on my appearance overall. I have my handles both as basically low opacity black, and then I just have the borders showing the color of the candle so that I can really distinguish between the two, but still know if it's a red or green candle just by the borders.
And were you talking about the Tick Plus layout as well, chicken?
Yeah, I mean, I showed it. Settings. I haven't really changed much on here. This version of my chart, I'm using just the regular uh, bold on the left, tick on the right, and my boxes I think are defaults. I could be wrong on that, but I just put them up top so that I can have my volume below when I use my volume indicator. So I'll actually throw a just a standard. I mean, you could put the regular even trading view volume in here, and I just put that in below so that I have everything in one space, so I have more room for my chart.
I think this is good too, since we're kind of on call momentum. DK says there are some green candles with red outlines. Could you talk about what those are? So we can,
Yeah.
once again, think about what we're scanning for and what that would mean. Right? So if we're printing a red candle, that means all four of our metrics are a green bearish. So what would be one of the kind of most confusing parts of that is going to be the price aspect, right? So price has not retraced to a point that meets our category of this is out of trend, right? What does that allow you to do as a trader? Well, you're not buying those dead cap ounces and you're not exiting your puts. Same idea on the upside, right? We had looked at the example earlier of this wedge break, this first wedge break that SIG has on the screen, where on our retrace, we still had green momentum candles printing regardless of price coming down. Trend is opposite of price. What do you mean by that? I think he's referring to quad momentum.
Sorry, I'm answering a different person.
Okay,
Answering Cave.
got you. Well, what lens are you looking at momentum in, DK? The momentum of the move? The momentum of that singular candle? Remember, we're showing you like full rotations with the momentum, right? Things don't run in just straight lines. They will go up and down. But there is at a point where one metrics, right, will confirm that that has switched. So it will keep you in the trade. So even though there are points where price might pull back, that doesn't mean that we have lost trend, right? That's literally our entire halfway back strategy. We are looking for a trend continuation entry. So this is confirming that that trend has the metrics needed to continue, which will then keep you through that retrace in the trade, right? Or if you see a point where we're not printing a signal, right? That means that there is probably exhaustion in said trend. So that would be a good place to look to exit or reverse.
And I caught
So yeah,
every single one of these uptrends.
no, yeah, it works very well. So it can really simplify a system where you can almost essentially trade your trend candles, right? Look for other confirmations, of course. I really don't want you guys to stop looking for multiple confirmations because that's part of the point of the package, right? Is we're giving you all of the confirmation signals right in front of your face. but it's helping you try to stay in trend through a retrace until we have identified a metric that shows exhaustion.
Cave, are you? Oh yeah, you're in here. So that's market sync. I don't know if it was mentioned, but this box right here is also giving your market sync reading, just as with the word trending in front. So if you don't want to read these, I made sure that we had at least something that was telling us what the overall was. So this will change colors and will tell you if it's like up or down, right? You can also set your alert so you don't have to pay attention to this little line. I mean, that's the candle is green, the momentum is down, or leaning towards downtrend. Okay, you already answered that.
Yeah, I want to. Did
Yep.
that make sense, DK, or anyone else who has questions on kind of like what what signal this quad momentum is giving you? Especially, I cannot stress enough tying it in with market sync. Like together, there is. If you trust the system, like watch it for a little bit and start trusting it, like you really don't need anything else for confirmation. So market sync is showing if quad momentum is an agreement. No, market sync is looking, okay, so our quad momentum is looking at the security that you are looking at. So in this instance, we're looking at SPY. If we went to a different ticker, say we went to QQQ, there are times when you would get different signals printed on quad momentum because part of the calculation is.
Did we just lose Mario?
Okay, I think I'm back. My
Yep,
Discord
you're back.
nuked itself. Okay, so let's look at the differences, right? So quad momentum, right? We're looking at an underlying for the price, right? If we go to different tickers, we will get generally the same signals, right? Because we're looking for all these internal metrics. But there's a caveat of is price meeting a certain threshold to agree that trend is continuing or not. Market sync is looking at we're let's see, what's the easiest way to describe this? How did I describe this in the PowerPoint? On this note, PowerPoint is available in class assets from last night, so really good reviews for you guys in there.
Every exchange overall has the ability to see the upticks and downticks of every individual asset. We are looking at a version of tick that we have applied to a moving
Oh,
average basically to follow overall trend, and we're looking for divergences across all exchanges. And when you have the Russell, you have the Nasdaq, you have the New York Stock Exchange, you have a couple others, you have just like the SP 500 as one is that we can pull individual uptick downtick on. That is essentially what we're doing is we're looking for divergences or confluence between those, and then it prints signals telling you if the market is moving together. Because sometimes you get a leading signal where the Russell is moving ahead of, NASDAQ, or maybe tech isn't rallying and only, smaller stocks are. You're going to get a divergence there because you don't have the full market behind the move. So it has less strength overall, right? So then you're going to be depending on your quad momentum for an individual ticker name compared to the overall market sync, which is it's in the name. It's we want to be trading when we have full market confluence. We want agreement across all sectors, all exchanges, because that means that there's actual buying happening across the board. Does that make sense? And you'll notice that our momentum candles will show differently when you apply them to different tickers. That's because we're taking individual look at the underlying price as well in those. So sometimes you're going to see different moves on different painted candles or prints, I guess we can call it,
Hmm.
depending on the ticker. So trust candle color. Well, you trust your TA, but I mean, what that's doing is allowing you to get a really good overview or understanding of what the market internals are doing. Plus, like when I say check if tick is above zero, check to see if you're in an uptrend on tick. Check to see if you're making higher lows. Like this is doing a lot of that work for you in that sense, right? Like we're able to see if there is a trend forming on our market internals, but also take into account to see if price is moving in a direction that makes sense. And if we, like Mario said, we still have the steam on a retracement to continue upward. So I mean, that's how you should be using it. We're not giving buy and sell signals with this indicator. We're trying to keep you in trades that you are either paper handing, you're selling when there's still trend and there's no reason to, or you're stopping out of a trade and they're you're going against your own better judgment, right? Like there are a lot of times where people are stopping out of things even though they know that the trade plan is still in place and everything's still going your way. You just get scared, right?
Also, a really nice fail-safe for if you're trying to take counter trend trades at points, right?
Yeah, definitely.
So it's like if we're looking for a counter trend trade and we have market sync green and we have quad momentum green, right? And we just broke out of the opening range high, like maybe it's your check to be like, okay, maybe I'll be patient and wait until I see some exhaustion.
Yes, a neutral candle.
Mm-hmm. So use it as I'm gonna keep using this analogy too, where it's like you can code Python to write Python, but you still need to understand how to write Python to do that. And that's what this whole system that we've released already is doing, right? We're automating a lot of the stuff. We're taking a lot of the necessary thinking, searching, um, or emotional side of doubt out of the question, but it isn't a robotic system. Like Sig said, we're not giving you a buy signal or a sell signal, but we're giving you trend signals, right? And we're showing places with the anchored VWAPs, ADRs, the entire package, right? Just showing you places of probable reversals. But you still need to understand enough of the price action in our past classes to know where, why, and when to execute still.
So sure. From 11 to 1:15 Eastern, just regular market hours, I'm assuming.
I think this is a good question too, right before we get into this Tesla. So, can the color change in a minute or after closing it will be the same color? So, it will change as the candle is forming. Once the candle closes, it won't change color again.
Yeah,
Right?
there's
But
no
if
repainting on candle close.
correct. So, if you get a flush down, you might have a neutral signal, and then if that candle just gets instantly bought up and the price momentum meets threshold, there is a probability it will print a green candle for you, right? And then candle closes. The next one, confirmation. Like I said, you can't. This is an assistance to your trading. You still need to be making human decisions, right? So we're still waiting for confirmations. We're still playing retraces, but this will assist you in executing those things.
But my personal favorite trade, for like a full confidence trade that I have is this. We'll talk about what you want to talk about on Tesla, okay? But I just saw this right here. So when you get a second retest of our red line, our red AVWAP, our final AVWAP for the day that's forms, this second test almost always results in a flush if we reject here. Like almost always. It's one of my favorite trades to play end of day because on this rejection when we're pulling all the way back up, this is such a good trend signal that we're going to get a continuation. But
Are
like,
they gonna?
yeah,
Sorry, go ahead.
I
I was just
don't
gonna say I'll
go.
let you
No,
talk.
no, no, go.
Tiny comment. I posted a bunch of stuff today in T2G about setups that I look for. Like this is one of Sig's favorites. We'll keep reminding you. That was all of all this kind of stuff, right? I really like when we slice through one with an extension candle. We generally slice through them all. And
Like
I was
here,
posting examples with Spy to that, right? And Sig really likes these, and it works on the green as well when we're in an uptrend on these double tests. So this pattern recognition is stuff that we'll tell you guys, but keep eyes on it. Start recognizing patterns.
yeah, I'll start screenshotting and writing on setups for you guys as well. I want to make sure that you guys have full resources to take advantage of this. Don't think you're just like uh, left to figure it out on your own. Um, but I think this is a pretty good example of what Mario's talking about. Even on this retest here, you just get a full waterfall down once the initial trend VWAP rejects, right? So we get a strong push up, and there's buyers who try, right? The full market's behind it, but then you get the sell, right? Sellers take control. You have from this single print of green after a red, you then have two neutrals, right? So like they're trying to buy here, but you have these mixed signals in between your neutrals, and you have random reds, right? Like this isn't a trade that I would be willing to take. I'm looking for a shift from green to red to neutral, right? Like I'm looking for like some spottiness at the beginning, a neutral, and then full trend. That's the trade I'm trying to take. Is once we get our neutral signal after a potential buy or from shorts covering and then reloading, which could easily be from this initial push and then reshorting and then push down. Could be these two candles even. But I'm looking for a neutral to then trend color, and I'm looking for a continuation, right? So we were looking just to trade the patterns where we can switch over from gray to, to a solid stream of colors of the same color. At least I am personally, because that's showing me that we have the continuation that we're looking for, especially in these longer trades that we're just taking out of rejection and then looking to play all the way down. Gabe, what did you want to talk about in this section from 11 to 115? Oh, you wanted to see what the indicators looked like during my Nimbus profiting. Okay, got it. Yeah, and you also had that really strong rejection. I mean, this is my favorite. I think Mario even has this one turned off. Like, we have very different strategies sometimes when we use these, but this red one is probably my favorite for trend continuation on the downside. It plays so beautifully, especially when you can get confluence with another indicator or a moving average or your cloud. I think it really plays well. And we'll go through some more charts and more different different time periods or days, I should say. And we'll continue to see the setup. You'll notice that on this second retest, you'll almost always get this waterfall down. And if we don't, then I think about these as almost a dynamic opening range, right? Because we're taking multiple price levels at different intervals that are important to us, right? But they're all in the beginning of the day. We're forming these levels every day, a new set of them. So if we can hold these or reject them, you have like a dynamic support and resistance and dynamic breakout levels. So I usually think about this as like our ORL, just like this, right? Our opening range low. So this would be like our AVWAP low for our overall trend. So as long as we're able to hold and continue to hold at least two of these anchored VWAPs, I mean, we have a pretty strong trend day.
I think what Sig just said there, really pay attention to. Like, and we can, even if your brain, I think about it more in a little bit of an auction market process, but exactly the same
Yeah.
signals, right? Where it's like, okay, if this is where people are shorting, at what point, based on a volume weighted support and resistance, will the shorts probably cover if they get squeezed, or longs, right? When are they exiting if they get squeezed down? Um, but it's the only one that I mess with sometimes is the blue one.
Oh, it's the blue. Okay, sorry.
Yeah, the green and red I always run. Um,
Can you show the 15? Yeah, sure. So, when I'm doing my regular setup, I have it on both my 3 and my 15, and I use my 15 version. You have to remember, if it's volume weighted, we're taking more volume in the individual candles, right? It's a different time period aggregation. So our lines are going to show different price points here, just a little bit. So let me go back to SPY so I can show you. Or did you want to see it on Tesla specifically? Just do Tesla for you. But this usually gives a pretty solid level to when we're below it. Like we usually can come down and we'll wick these, and then price will close above or below. So let's look at the same period. This might be a little hard to see, so let me change to to Sorry, just changing that so you guys can see that a little bit better. The gold brown area. Oh, these. This is just areas where we've had strong. I mean, it's in imbalance basically. So it's an area we're gonna have to be able to push through for price to have a actual move. So we have like a big downward volume candle, and then usually you'll get a retracement to test those levels. So if we have an imbalance in our buying and selling, we need to get through this for any sort of meaningful continuation, right? So I just have imbalances marked of where like we had a very one-sided move that needs to be filled. So like on big volume spikes where I say, let's watch the second candle and see what it does. Like usually on like those big volume moves, we'll get a retracement pushing back up to see if that, that was an actual level that we have now created, if that's going to hold, right? Because if there's low liquidity there and we push through, or if there was a ton of volume that was coming through and we need a retracement to see, what's the best way to put this? To see if the continuation is actually valid, I guess is the best way to say that. But yeah, so that's your 15. Like I said, I usually just use the 15 with 3 leg for my anchored VWAPs as PTs. And what I'll do on this one, the reason why you could hardly see my anchored VWAPs is because I changed them to do this, which is another thing that's different, is I usually have them on the circles with a lower opacity on my 15, and I am just paying attention to these lines that we have checked, which are our price lines. So they're actually creating horizontal lines at our last known price that it's been given. And if we track them, they basically are just moving up and down with it, and then all I need to know is how it's interacting with our candle that's present. Right, so if I do a little bit of a rewind here, and let me turn off our 15-minute candle tool. I've got that on this one. We have, I don't know if they're going to change that. Okay, yeah, so you see how they're shifting with it? So I can just keep track of this zone with probably like a 1 deviation above and below for wicks. So I can just keep track of the zone and know where we need to be able to push through for any sort of reversal, any meaningful reversal. So I know where like our main area of contention will be. And I'm just paying attention to these, and then I have these very low opacity usually so that I can just pay attention to these lines and not have too much mess on my chart. I really like those price lines. So usually I have my 15-minute pretty small, and I'd be looking at something like SPY. Only use a 3-panel for SPY. And then I could have my tick chart low like this. And then I can have my 3. And then I'm just having I have like a pretty zoomed in version usually of my 15. And then I can just pay attention to these 2 lines to see any sort of meaningful rejection or retracement. And yeah, and then I just have UVXY up, see any counter moves that, or if there's like a bid that's starting to form on this, we know like, okay, well, we're, finding a short-term resistance, or, oh, this is not moving as much as price is moving here. There isn't a much volatility to be, expected. Like, we're not all over the place, or it's a known event, right? Like, there's a lot of ways you can interpret this, but usually I'm just looking for big pushes in either direction on that. And this is usually my setup for SPY every day. And I usually have just Vold on the left, or sorry, yeah, I have Vold on the left and out of sight, just because I like the larger tick, and I find this more helpful. But if you wanted to be able to see both of them, you can do this, which we added specifically for setups that have multiple panels. It'll take a second to load, but basically it will put your tick chart and your Vold chart on just on top of each other, right? So you can have it right above and below, and then you can have a limited space where all of these just, are going to be on the same sector, same grid layout. I don't know what to really call it. But basically, yeah, above and below, and you can still have a secondary indicator here, volume, whatever you want. The way that we designed this, or what we designed, what we had in mind when we were designing this, is we wanted to have a system that you could basically set up like this, where on a 2 layout system, if you didn't have premium, you could have 2 tabs open and have those tabs next to each other, where you can have 3 overlay indicators on, and then 3 understudy indicators on your secondary chart. And all you have to do is turn off your candles, and I've got indicators on this one, so we can just turn these off. Actually, technically, we probably don't have to do that. I could just full screen it, but all we're doing is this. Invite. So I can mute this. I can have SPY on the same time frame, 3 minute. I could have my 15 over here, for example. And once this loads in, settings, vertical. Top. So I just am changing my display to a vertical, and then I'm moving all of my tables. And we made sure that we had a lot of options for these, because with future indicators, we may have multiple studies or indicators that interact with each other, but are just separated for loading time. So we want to make sure that the boxes have lots of customization, so that you can place them accordingly to how, what indicators you're using in the space that you have available. Okay, so you can actually just double click on this indicator and it'll make it full screen. Let this load in again, and then you can have an entire window display just focusing on your understudy indicators. So we can have 3 of these here, and then you could have 3 on your actual stock, and you just keep the same time period for both of them, and then you have the same information without having to have TradingView Premium, right? So you'll have the full package once everything's released, and then you have, like a really nice market dashboard where we can have our tick, our bold. You could have multiple other indicators below. So if you have a favorite, we can just pull up like an RSI or something like that. Let's do a MACD. Just a standard. Yeah. Right, so now I can have my MACD. I can throw this on here, and it'll be on a separate scale. I can just move the scale to whatever I'm to adjust it to this one, and then we can have all of our indicators in the same panel and have a really nice dashboard for the space. I don't know. This was what we had in mind when we were designing this, so that if you don't have premium, we made sure that everything would be designed with that in mind. Hopefully that makes sense. Any questions? Do you pretty much just scalp calls from tick low to high and puts from high? Yes, you definitely can if you're fast enough. Dan does that a lot, but I would recommend if you're going to play those kind of setups that you wait for high tick of the day or low tick of the day, because you're going to get a reversal off of those when playing tick. And we are tracking those right here. So if you guys weren't aware, the blue lines on your tick indicator are your high and low for the day. And then this one in the inside is tracking current price. So we're always keeping track of our current price and then our high and low for that day. So you'll notice that on our high tick of the day, we have an immediate retrace all the way back down to our negative 500 right afterwards. So that's why when I say like I'm not buying here yet because we're too high up on tick, or I'm waiting for a zero test, it's because when we get up into this range, this red range on top, it's a pretty, you could almost think of it as your RSI oversold or overbought, right? So it's kind of like oversold down here, overbought up here. So you're going to get a reactionary move just back down to your zero on tick. And that might affect, you might be able to see that in your price overall. Sometimes you can't really. It just depends on what's being bought in the market at the time, what sectors are being rotated into. But like we can track price here. So this was our high tick of the day on this push, and then we get this small retracement down. So you would have been able to catch a decent amount of that big push up that we had there, just by taking a short at the high tick. And you can see that over and over again. We're always going to like revert back. So if you're going to do those kind of mean reversion strategies, then I would definitely wait for the highs and the lows. Like I said, I've been really trying to get people to do this more often, but just really pay attention to what's going on. Are we making higher lows? Are we making higher highs? Are we making higher lows but lower highs, right? Like are we pushing price but unable to hold that price with our wicks? So when I'm looking for direction, I'm looking at our candle bodies themselves, usually, right? Like we can get a pretty clear picture of where prices are closing and where they're pushing up to, and then I mean, it's the same rules with candles. Like this is where the high was and where price pushed down. Where did we close? Any other questions? Or do you want to just like look at some charts and see how they interact? The story?
Oh, people they just want the name.
The name's dumb. It's just a joke that we came up with on the spot in a voice chat or in a call on live one day. I can't remember why. I think it was after hours. I know
Yeah, well,
CJ was
so
there.
the the there's a system called the Three Finger Leroy
Right.
that is just plotting um different like volume imbalances at different times, and
This is the
then how it reacts, how like it'll look how price reacts. So it was kind of like we thought we had a similar idea, but with anchored VWAPs of this like three plotting, and then so it's kind of like pays a little bit of homage to the three finger Leroy, but only the fact that we're plotting three different lines. There's not much of a story.
there's
I
no real
wanted to
story.
call it the shocker,
Yeah.
but
I
I
don't
got
even
voted.
think that three leg Leroy thing was a thing that we talked about on the first day. So it's like it's the how did you guys meet, and it's you don't want to tell the real story, and then that's what we're going with. I
Well,
don't
that's
remember.
like because that's how I came about it. Because Julian was doing like this very weird like placing anchored VWAPs, and that's when Order Flow Labs was really pushing three finger Leroy.
Yep.
Um,
Yeah, and
so
then I just was playing around with different price points, and then we
mhm.
stuck with the ones that we have. It is what it is from there. Just a continuation off of an idea, and then I mean, how did we decide on the VWAPs? Just by looking at how price interacts, taking it's they're
You know
just
how we
important
tell you guys to
times.
back test?
Yeah, I mean, you can
Back
literally,
test.
yeah, just like actually look at what's happening on those price points. I don't know. I mean, that's what we did, but we're just taking like three usually pretty high volume or big moments. So we're taking a value from the previous day's close. We're taking a value from our opening range break, right, from our first 15. And then we're taking a lagging one after that to determine overall trend from our first, basically our first hour of the day. It's not the hour, but we're taking from different points of those candles to get a full sense of the closing volume for the day, plus the volume that came in the morning, and then volume after everyone who wanted to sell and everyone who wanted to buy, who bought pre-market or wanted to get out of a position at the start of the day. We then have a full scope of the volume from end of day pump to or dump to the pre-market, and then beginning of day flush or moon. So we have a full scope of that, and then we're tracking an average based off of our volumes for the rest of the day. Right, we're able to base our VWAPs off of that. Then we have a really solid range to know if we're trending or if we're going against the trend, where we are within that range. So I mean that's literally all it is. What is the gap percentage in the chart? Mario can talk about that. I don't use that.
Yeah, the gap. It just tells you what the gap of the day is. That's it.
if you want to turn off that table, you can go to style and then just uncheck the table. So if you're using three-legged on multiple charts on the same layout, you only need one of these usually. Um, if you're using different time periods, right? So you can uncheck that and then have it only being displayed on one of your SPY charts, for example.
Yeah, gap is literally just the gap.
Yeah.
That's it. I think where I find the most use out of the volume and ATR table, um, is when I'm like, say it's like right after lunch, and I'm flipping through tickers that they're just to find like a setup, right? And if I see something where the ATR of the day still has like maybe like 50% of to move of its average ATR, I will favor that type of setup more because it has more juice in a normal one standard deviation move versus something that's like already at 100%. It's already made its average move, right? Same with volume, where if you're like playing an opening range break, so you're within the first 20 minutes of the day, and your RVOL is already at like 30 or 40% of average, you are guaranteeing that there is abnormal volume in that stock that day. Right? So it just gives some confidence in participation. Same way on the downside, right? It doesn't matter what direction it is. But like, is there abnormal interest in this today, right? What is the RVOL? Is it over 100%? If yes, then that's abnormal. We can note that, right? That can give us an edge. Same with ATR, right? If something's making a 200% of its average ATR, that's important to note. Um, you don't have to trade off of it, like I said. And like Sig doesn't quite find it helpful. I do. Doesn't matter, right? We both can choose what style for each, and I want you guys to do that too. That's why I bring that up. Um, Part of the like power of three-legged goose is that there's so much stuff in it that if there's a part of it that doesn't fit your system or your pattern recognition, like how your brain works, you can turn it on or off, right?
Everything.
Yeah, we're caught up on questions.
Yep. I mean, talked a lot about most of this stuff already. The we haven't gone over the Volt advanced decliners table at all. I don't know if you want to talk about that. This is
Yeah, I mean, so obviously pretty straightforward, just Volt over advanced decliners, but I talk about this a lot on voice. And this is one of my most powerful of like what type of day is it kind of indications. Um, so it's there when we talk about Volt curling, you can see every time Volt curls either on the top side or the bottom side, right? Confirming a reversal. And where it becomes really strong, we didn't have it too much today, but there will be times when you have advanced decliners, for example, still pushing to the upside, and Vold will come down before it. So it's leading, volume is leading into down volume stocks before price reacts. So it's something where on a day-to-day normal basis, just make sure everything has confluence, right? You can draw even trend lines on it to if that works for your pattern recognition skills, but if Volt is moving up, more volume's coming into up volume stocks, right? Um, on the days where we have divergence between advanced decliners and Volt, it can be really powerful to catch drops before they happen. If you have any specific questions on how to read this, what it tells you, if there are questions specifically on more Tick Plus stuff, I would once again really recommend going and reviewing our internals class. We even get into sectors in our internals class to kind of understand the cyclical and defensive scanner area as well. Do you have any questions on that? People understand the importance of the intraday sector rotations, what it's telling you, other than just keeping an eye on. Sometimes Tick Plus gets weird with replays because of how we have to pull the data.
yeah, we can do it.
It just like prints across the screen, right?
Yeah, because well, the reason that it looks so clean is we're only showing one day at a time, and we're not showing anything to the left. So with this setup, the problem we did this so that you can have multiple indicators on, and it doesn't take up the space to either side. So you can have bold, for example, to the left, if you desire. But when we go back on replays, we're just give me a sec. But basically, it's just going to overlap on a lot of things because of how it's designed for today's trading itself.
Yeah.
If you want to do replays, Sam's created another indicator that's free right now that basically just lets you have a chart within your chart as an understudy. And you could pull up your tick there, and that you can use for back testing, but you're going to have to draw all of your lines on that for
to like your 1000 and all of your zones and everything. That's the only thing I can think of for back testing with tick. Okay, he's working on a version for replays. Cool.
We'll say, I don't know, backtesting tick is helpful, but I find it much more helpful for learning on specifically, like, this is only internals, to be forward testing. Maybe that's just me and how my brain works, but
I don't know. I mean, while I look at tick, I'm looking at what the candle's doing in that time period, so it's not very helpful
yeah.
for me to back test it, other than to look and see, oh, at our high tick, what happened, right? Like if we're able to know that once we reach up into these areas that we're going to get a pullback down to our zero, and we can see that on our tick over and over again on the day, right? Like we get our high tick of the day and immediately go back down to zero every time, or our low tick and immediately go back up to zero to test to see if we're going to get a trend continuation or not. Like that's the only real back testing I've ever done with tick. Other than that, I use it as an intraday metric to see where the if we have strength or not on the push, if the push can last, if it's a short cover, or if it's an actual rally. You can tell most of those things just based off of tick. And that's just when I'm talking about having a sustained move that holds zero. Like you can see, okay. Is there a reason that these aren't tracking together anymore? Oh, it's because I'm in replay mode. Okay.
Yeah.
There we go. So you can actually see when you're going to get a sustained move based off of, if we didn't have quad momentum, if we didn't have market sync, if we didn't have any of those other things, we can just look at a. I'm just going to do this like this because it's much easier for me to interact with. All right. We can see when we're going to get a sustained trend just based off of where prices are. I'm going to go with price, but where these candles are closing, right? Like what was the final price on for that time period? And when we're getting this really nice downtrend, or if every push up is rejected at our zero line, which is our white line in the center, right? Like we have a pretty good understanding of our general direction. So on every push up, we're getting a push back down. Our down tick outweighs our up tick, right? So we know that we can have our continuation and we can stay in this trade because we have a strong, clear direction at what's happening, right? With every push down. So when you're back testing, I don't know if it's going to show these smaller candles being created. I'm not sure. It might just be plotting the individual candles without showing the actual forming of them. So yeah, which is, I think that's how it, if my memory serves me correctly, I think that's how it is. So I don't know how much backtesting that will actually help with, but like even in zones like this where we're chopping sideways, you can kind of get a good sense of when the rally or when the trend is changing, right? So if we have this push down, you can see that push down pretty clearly in our tick with lower highs, and lower lows, right? And what happens when we start to try to find a bottom? We get more tests of our zero line, right? And those tests are making slowly higher highs and lower highs, and higher lows, right? So we can get a sense of when a trend might change, and if we have an understanding of where a pivot is, or if we're going to get a potential double bottom, or where we are in relation to our price, and we have something like this where we can easily read that the market is starting to show upside, right? Or at least not more downside pressure, right? It might not be upside pressure, but it is at least less downside pressure. We can get a feeling of when we're going to kind of get this sideways price action before a rally. And so you can see that here with that downtrend break and then some sideways action with more and more zero tests and then an actual hold over our zero. And then on the push down, we still are able to hold zero at the close of that candle. you get your major push up, and that's your high tick at that time, I believe. Yeah, or it's basically up there. But then you get your push back down, right? So we get an immediate squeeze candle to the upside. It's tested, and then it immediately is sold back off. So it's not a real movement that we want to be paying attention to. It's just more sideways price action before we get our actual move up. And you can see that actual move up because we get, again, sideways, more and more tests, and then we start seeing these higher lows, and we get these higher highs as well. And so you can kind of get a feeling for the overall trend and where strength is on the day, right? Like we can see when this was showing us when this was going to top out, right? You can see that in tick. You can see that we're unable to make any more highs, right? And every time that we do try to push up into these, they're immediately sold, and we're closing, and we're closing. And then we start to just get this pattern over and over again, where we get this selling pressure, right? This downward tick pressure, and then we're finally just going to push down. And then you get a new pattern, which is this downtrend, right? So you can get a really nice feeling of if you can stay in a move, and if that move's valid, or if the market isn't supporting it, by just reading the direction of your higher highs and your lower lows. And you can see when exhaustion starts happening, or if there's no more, a move won't be sustained on a large candle to the upside. So this is why I pay attention and stress tick so much, especially on live, because these things have so much value if used correctly. And you can clearly see like our push up, right? Like you can see the end of this downtrend, and then the starting of like the testing of a bottom forming, where we're trying to hold over zero and unable, but we're still making these push, like we're just sideways and chop. And then you get, what do you get? A really nice push up in our overall, right? Higher lows, higher highs, right? Like that's what we're looking for. And this is a 3-minute, but I'm sure in a 5-minute, this one probably closed above the 0 line. But we're able to see that there was strong uptick pressure on the candle close here, right? Like that's something we want to be paying attention to. We still have buying pressure, even on every one of each and every one of these retraces. And this is able to then push immediately back over our 0 and hold and give us our high at that point. So I mean, like this is how I use it. A lot of this work is thankfully done for you now with MarketSync and with them being printed directly onto your candles as well. You no longer have to know if there's an uptrend or if this is just a small retracement. Like you can rely on your candles a little bit more without having to have lots of, a separate indicator specifically to look at it and always be paying attention to tick. And I will be doing that regardless because I care about the entry. Because if you can get it on, like, okay, so we did this move earlier today, where someone asked if I would buy here, and we were buying like right into a resistance, or about to break out, and we were on our downtrend break, but we were all the way up in, I can't remember the exact time, my bad, but we were in the 500 to 1000. It might be this box, I'm not sure. But basically, we were pushing up, and tick was already up at these highs in our higher range. And like the temptation is to buy here, but we know that this is going to revert back to our 0. So you can wait to see how that interacts on the push down for your potential entry, right? Like you're going to get a much better entry, not at the top, but on the reversion back up. And if we're able to hold on above our 0, in this range, you're going to get a much better price as people are panic selling into you, right? That's the goal. So it becomes both a a really great indication of our overall trend, right? But it also gives you awesome entries if you're paying attention to where price is closing. Hopefully that makes sense. We covered this more in our market internals class, but I think that was a pretty good little brief explanation on tick and how it can be used with Tick Plus.
I agree. Something that helped me when I was first learning about internals is really going through the logic chains of what it's showing. 'Cause it's
Yeah.
not just indicator, like what is it telling you, right? And I want you guys to, if you're struggling, to really try to understand the logic of it in terms of the relationship of underlines and an ETF, right? Because the ETF is only going to move with said underlines, right? So when we're looking at the underlines very granularly, it can help us predict moves in the ETF. Or what would it mean if we have a low tick but a higher low in the ETF, right? So a larger percentages of stocks are pushing down, but the ETF that they're part of is not, right? Which means there's probably more relative strength in a handful of names that would carry us to the upside. So the smaller names will follow suit with the ETF, right? Because they work together. Yep, exactly, Bulldog. That's literally whenever I'm screaming on voice, watch Vold curl. That's what you just typed is the way to describe that with words. Because you're seeing a regime shift, right, of stocks that are moving up or down. Where's the volume going? Because what initiates a move, volume or price? Think about that one.
Would add most of the time after that.
What'd you say?
I said I would add most of the time after that.
Yeah, most of the time. True. True. That's I guess that is actually a good point, and something I try to always stress too is like we can give you very black and white answers, but the market is not black and white, it is very gray. Right? So these are like best use case scenarios. And that's all we're doing, right? We're playing probabilities.
We haven't even talked about the opening range yet, but
No.
uh, something that we've gone over in previous classes are the percentile chances. I guess the chances on different trading strategies using the opening range. So if we are able to break back over the opening range low, there's a really high chance. I think what was it, 80%, Mario?
Yeah.
Yeah, 80% chance that we're going to go and test our mean. And we did that a lot today, I feel like. I don't know if it was on Spy. I was watching something that just kept doing it over and over again. And turn that back on. Mid.
What about tick on ETFs that are, well, he's finding this, I'm gonna answer this. So what about tick on ETFs that are lined up with a sector? So each of, if we're having individual, it'll only look under, usually it's exchange based, right? We do have some sector ticks, but that's just your pool you're pulling from, right? So our NASDAQ tick is only looking at underlyings that are part of the NASDAQ, right? Our NYSE tick, which is what Sig and I prefer, is only showing um, New York Stock Exchange stocks, right? So that's going to cover most of your um, like sectors inside of that, but we can get down very granularly if we want to. No, so Tick Plus itself in the settings, you can change it from NYSE or NASDAQ. If you go on XLE, it won't like, yeah. So we recommend keeping it on NYSE, but if you're only like a mega tech trader and you don't care about what healthcare is doing, right, we can go flip over to the NASDAQ, which is something like Avery does.
Yes.
Same idea with Vold, right? We're pulling by exchange. And that's where, we can tie this all together, Damer. So that's where the power of our market sync comes in, right? So with our tick part, we can be granular for precision of entries with whatever instrument we're trading in whatever exchange, right? But how do I know that just because an exchange is moving, I want to know that the other exchanges are moving with me as well, right? Like what do Sig and I do on voice when we see like a breakout on Russell? We're then looking for, say, ES and NQ to follow or diverge, and both of those are equally important to us. Right? So that's what Market Sync's telling you without having to look at all the charts, right? Where we can still be granular with our tick for precision of entry, right? So it's telling you different things, even though we're looking at internal metrics or measuring them very differently.
Yeah. Okay. Yeah. So on the breach on the uh, break back into your opening range low, you have a really high probability of price pushing to at least your opening range mid line. So that would be your first PT. But basically, every time we break below the low and then push back in, you have a very high percentage chance that price will come to your opening range mean, at least your middle, right, of that range. So a trade that you'll see a Mario and I do a lot. Dan's been doing it as well, and you'll see Leighton do it or talk about it in chat, which is just basically this breach back into your opening range low, which is this bottom line, into our opening range mid. So that would be your first price target where you start taking some off into a push up, right? So if you're buying the break, you get your secondary candle, you have a 3 bar here, right? But all we're looking for is for our opening range low to hold, and then price is able to then push up to our mid. It doesn't have to then breach that and go to our high, but the odds are that if we get a breach back over of our opening range low, you will get a move to your opening range mid on a hold of that candle. You just have to wait for that candle that breached to close so that the move's like actually known, right? Or you'll get stuff like this where we breach over and then it closes below, right? Break over, closes below. So you are waiting for a confirmed candle close above, and then you can play back up, just like here. Could you go over how you would have played the QQQ cloud alert using TLG, please? Is there only one cloud alert today? I can't remember.
Yeah, I think it was a short. I do on the opening range too. So Frank had asked about this um, today during the day, and I kind of went into it on price targets. How do you play the price targets? A lot of that comes into thesis. I want to touch on this because I think it's important. Um, but if you're looking for a quick, kind of like a rapid flow style trading, man, playing these opening range either lower high breaks and just selling at your first PT makes things so simple. A good example, even on the screen right now, is you can see that you could play this opening range high break into our first target, like Sig was saying, take off your core, and then you have a next target to leave runners with an invalidation level if we fall back under the opening range high, right? You could just put your stop at break even. We rock and roll. So that's how I view it, where I'll take core off and then I have targets for runners. And capitalizing on the price targets with an ADR zone, whether it's upside or downside, can be really powerful and an easy way to kind of turn your brain off and just play a set system.
5 a.m. today on the Qs. I didn't look at a Q chart once today, other than just NQ. So give me a sec. 10:55. Basically printed here. Is that true?
I thought there was one in the afternoon once you took your call. Maybe I was mistaken.
Was this the one that I can't remember.
Oh, it was a spy that came in.
Okay, yeah, I was gonna say spy
You were
bullish. Is that what you're?
Well,
Wait,
I
is
mean
that what they
both. We can
wanted?
walk through both. No, I'm assuming they typed correctly with the QQQ.
Okay, yeah. Well, I mean, regardless, this is kind of tracking the bottom almost, but you've got at least a move down. I think this is the scalper, right? So it needs a move of.
Yeah, I can take a picture of this really quick. Put it over here.
This doesn't look right to the image. What? A 15-minute? Oh yeah, it does. Okay. Yeah, I mean, this is 10:55, so this is where it would be.
Mm-hmm.
I mean, I don't really much to say. I don't like you can basically just keep in the trade until you get a quad momentum candle that no longer is supporting it, right? So you have a push down, and you could have been in this trade for you know till 11:06 and still have made profit off of that alert. And I would have been already in my put because we can just play a failed opening range high break and then play that back to our mid, which we know is right here. Right, so we have an attempt at a bounce, a rejection, and then a continuation, and also a 3 bar, right? Like you have, and then you're pushed down. So you could have already been in this trade just using an opening range. But I mean, like you still could have made money on that trade. But if you have no understanding of where a potential bottom is going to be, then you would have been probably in trouble because there wasn't much continuation from entry, right? I
I
can't
know
really
this is
think.
kind of hindsight, like obviously looking at the chart forward testing, but this is something that I pushed really hard when with rapid flows last year, where alert would come in and you instantly enter. And cloud alerts are designed for that, correct? So you kind of have to play that system if you're going to play the cloud alert system. What I would do in this instance is understand that we have a technical algorithm firing a bearish signal, and I can be patient and wait for SIG's favorite setup, right? Can we push back up in a retrace, and do we reject our red anchored VWAP with a higher tick? In this case, we did right after that. So obviously that's not playing the cloud alert system, right? So you have to understand and like define for yourself what system you're playing. Am I playing the cloud alert system or not? If the answer is no, we can use that alert as a way to have some bias in a trade and then use the system, right, to enter short. Where would I enter short? Well, on our anchored VWAP rejection, right? So once again, that's a little bit of a gray area because you have to then make the decision that you're not playing um, the cloud alert system, right, which is enter on alert. But that is like how I use both together, right?
T's on. I think I have it on 50% right now. Yeah. How could you have known that how it was bottoming? So we just kind of went over this with Tick, and we can change this. But I mean, there was a bottoming on NYSE, and that probably helped carry this, right? But you can see the bottom here. We stopped making lower lows and lower highs and started to bottom on our tick itself and go sideways while testing our zero over and over again. And we were making higher lows that entire time and higher highs on that, even though we are going sideways on our tick. You have a bottoming here, and then you have a push over our zero and our hold, right? Like, I mean, we kind of just went over this, but that's how you can kind of see a trend change. I mean, let me go to a higher time frame and see if there's any other signals that you could have gotten from that. I mean, other than extreme buying happening every time we come into this zone by all of the wicks. Very aggressive buying in this area over and over again every time we push down. That's what these wicks represent, right? We've got buyers pushing price back up, making it close above, close above, close above. So, I mean, other than that, you've got one right here even. With a ton of wick lows. But I don't know. I mean, that's why I wouldn't be taking a short ever, I don't think, near like lots of lows coming in with a range like this, right? Because like you've got just trying to represent this. This is probably the cleanest version I can do. But like when you have like these levels where prices retraced and then pushed off of and had like really strong moves to the upside, I'm always going to take a note of those. But I think that your best bet always is going to be able to watch tick and see that curl. Because you can even catch it before market sync does, right? Because this is still bearish and prices are still pushing down. We're just starting to not make lower lows. That's literally all that's happening on our tick. So like these are still bearish and I'm still like watch for zero, watch for zero, watch for zero. But you can see that curl before we start to do any sort of pushback up. You just have to know what to look for and have the overall trend already. You have to have already known what you were looking for here, right? You had to be able to see that it was starting to curl or at least flatten out. So that's I usually try to keep mine marked up on the day, just the singular line. We can see if there's a difference. I don't check NASDAQ pick ever, but maybe something else showed there. So let's wait for that to load.
Also with three-legged goose, I think you mentioned this, but we can see it with our momentum, right?
Yeah,
At the
definitely.
bottom, like when it goes from confirming bearish to neutral, something's disagreeing,
Yep.
right? So that's when you're in your head, you go, okay, what's disagreeing, right?
Did it flip? I wasn't watching my screen. Yeah, okay, so it's loaded. I don't know if anything actually changed. I wasn't watching. But yeah, I mean, like this curl is pretty obvious once it was pointed out, right? Like you've got a very different move than this aggressive waterfall down to these last couple candles that are just not the same. They don't have the same energy to them. You can see that over and over again on the bottomings, right? Like you can start to see like an actual trend now that you're looking for it over and over again. Yeah, they've been very slingshot lately. So I mean, especially on a day like this, it's like I don't think I would ever personally get into a put alert if the overall trend was already, um, we had already basically been in that trend from opening range high to opening range low, right? Like I feel like I've already missed the move. I would wait for the retest of a opening range low to see if we were going to get a rejection, which I probably did play this today. I can't remember. But on SPY, right? But like I'd be looking for that move. I definitely played this opening range low to mid on SPY, and I think this is the same thing. Exactly the same. This 3 bar and then push up. But I would be looking for a rejection of our red and then a continuation down. So I would be noting that our technical alert printed a bearish sign and then be looking for a entry based off of just any sort of retracement. And something that you guys can do that I think is very useful
So I can delete all of our lines on our chart, and I can just take our high to our low, and I can just put that there, right? Like we need it to be able to breach this area for a validation of a trend change. Like this is our resistance. It needs to be able to hold over here, retest, and push. Just off of this move right here. You can even take one, sorry, I'm kind of losing my voice, off of probably either of these, and you would have gotten more realistic targets based off of here, let me just go to a 15. Is that 1055, right? Or 1050, yeah. It's 1055. Right, so what did this 15-minute candle even look like? Right, okay, so to me this would make sense. So you have this candle at 1045 that closes, and then you get a bearish alert at 1055. So our 15-minute hasn't closed yet, and you have a retracement of from here to here, right? You're halfway back off of the previous candle down. We're now making an inside bar, right? On our bodies alone. Price is holding our candle, and we're trying to push back up into it. So on the wick retrace, this is our resistance, which we push right into and immediately sell, right? And it tries to get back over on our next candle as well, and is unable to, and sellers step in and push it back down. We need to get rid of this imbalance here before price is able to move back up, right? So with each attempt, we're eating away at the sellers, right? Buyers are stepping in, pushing price up, sellers step in, push it down. Once that's exhausted, we're able to then push through. And then you see that where we're able to make higher lows and higher highs on each of these relative candles. And then we get our big body candle where it's only buyers, right? Like we've got strong buying presence here and not a lot of selling with this wick. So I just want to like show that as like just simple retraces, you can do some pretty powerful things. So if I just take high to low from this candle to this candle, we've got a really good understanding of where price needs to be able to hold and where future resistance will be, just based off of our big move down where there was from this, right, just this price to this price, sorry. But yeah, I mean, like this, and then you can take your larger move, right, to the bottom, and then you have why we resisted here, right? Like you have what we need to hold, where we can buy, just based off of like a simple retracement off of the high to low for each impulsive move up or down. And I'm considering any of these like trends as impulsive moves on an intraday basis, by the way. So I'll use those phrases interchangeably.
I guess I should define really quick since people are here we're talking about this. When I talk about like a macro impulse and a micro impulse, these like large 15-minute full moves is when I call it like the macro impulse, and then like a 3-minute move inside of the candle is what I refer to as the micros.
Right, because
I
like
think I've
you,
never ever really defined those.
that makes sense, yeah. And then like you go in the hourly, and then you have an impulse right here for me, right? Like
Yeah.
this would be mine, where I'm taking the high to the low of a clear directional move. And then we can just change this back up to a green for the 618s on the bottom. And like we know where price needs to be able to hold. And I usually do one from top to bottom. And then I'll also do one for our first 15-minute candle. This is usually my favorite. Just take our retracement of our first candle of the day, especially if we gap up. That this is probably my favorite retracement to do. So this is just taking our first 15-minute, or sorry, our first hourly of the day. But you can do that in the first 15 too. But this is basically your support for the period, right? Just our high to low. You've got a trend bar. Every time price pushes into it, we buy. And I can go on a 15 just to show what I was talking about. Just off of this first move, this is all I meant. So you can take your high to your low here of your first without taking the prior day. So we're just taking a retracement of the gap.
and we can delete this hourly one, and then you can get your measurement for support, which is very accurate, right? Like it does a pretty good job. So you're just taking from your high to the beginning of the day. I find that one very useful. So I'll use the overall move and then just this high to low from open to our first high, intraday high, before our reversal happens. I find that one really, really, really good. And we talk about that more in, I think we have a class specifically dealing with halfway backs. I don't remember, do you remember the name of that one, Mario?
There's a handful of them.
Yeah, that's kind of like every previous class we've always gone over halfway backs, but I know that we
I
have,
think we have one that's like actually.
yeah.
Let me go to the website.
But I mean, like that's such a powerful level, right? Like it's also opening range low, but like even on the push downs, like that's a really good way to find price target. You know, it's just 618. Like we're still in a bullish push up, like a bullish up thrust, I guess if you want to call it, right? So any retracement back down is just going to be like a consolidation until we break below our halfway back of this move, right? Like it's got to be able to get below ADR for me to tell you that the trend's off, or we're just setting up for a larger move, right? Like that's.
So
They just
I
work,
did
yeah.
find what you were talking about. This class is literally called Opening Range Breakouts and 50% Retracement. It's the only class you will ever need.
Yeah,
So
there you
like I
go.
linked it in here, but really, guys, if you now that you're like, oh, I have the indicator, what do I do? That
Yeah,
class tells you exactly what to do.
go watch the video on the opening range break and halfway backs.
So when we say we're like automating our system, we mean that we are automating our system, right? So this is step one is our intraday. Well, right here it is. So
Something that you can add that Sam Random, the guy who did the development on these, has made for us as well, is a 15-minute retracement tool. So I had that on my spy chart earlier, but I'll just bring that back up, and that'll be available for you guys as well. It's just search 15 candle tool, and this is going to get an update very, very soon, actually. But in its current state, I can show you the basics of it. So when you're on a 3-minute chart, it's going to show you the 15-minute bodies of those candles. So you can get an understanding of how price is moving within our 15-minute candles. Just turn everything off. This. But basically, it's showing you the full bodies of those candles. And then it's also giving you... It's giving you a retracement based off of the previous 15, showing you the top wick, the bottom wick, the candle body, and then it's giving you your halfway back, your 75, and your 25. These zones are going to be updated in the future version, but this is a tool that's available to you right now. So when you're using that with quad momentum or with our halfway backs on our retracements, having an understanding of where the previous pushdown is, where the resistance is at our 0.5, and you can see a very clear rejection based off of our last 15-minute candle and a push back down, right? Like we were unable to break that. Just if anyone is not understanding, this is our halfway back of the previous 15-minute candle. So if we go back up to the 15-minute, you can see that this is going to be our halfway back of this candle, right? Like it is what it is. So you can even use it on your 15-minute chart just to have these levels marked for you. So I actually use it more so on my 15-minute, so I don't have to do a measurement every 5 seconds. And I just keep it on like this. And then it just lets me know where we are in relation to that. You can also turn on these lines here. And these are going to... These lines here are showing you the time left in those candles. So as we get closer to the hourly close, these lines will get closer and closer to our price, or our price, yeah, they're going to get closer and closer to our price until they disappear, and that'll tell you how far away we are until the end of that hour. It's basically the best way that we could figure out how to display time at that time, at that point. So there's 3 different lines, and they're these vertical lines, these lines going down, and you can change the colors, I think, on these yet. Yeah, I think.
Well, it'll also print like in the indicator drop down, it'll count down time as well. Like
Trying
in
to
the
figure out.
actual readout.
You're talking about it in here.
Yeah, correct.
Yeah, I always have that closed. But yeah, it tells you there as well. I just control C. But yeah, so this is also a super useful indicator. We're revamping it. It's one of the first things that we developed together. So it's old, but it's getting the much needed changes now that more people have learned the system and we're working on indicators. But this is super reliable to tell you if trend continuation is happening. Right? I mean, like, you can't, it doesn't get better than that, where just a clear halfway rejection and push down. So I think right now you can download this version. You just search it. It's at this state, it's currently free, right? Just 15-minute. You can get the old version. I think the updated version will be included in the candle pack just as a private indicator, because we're going to be adding some more stuff to it. But this version's good to go. And you can turn off these overlays if you don't like them. Just turn off boxes.
Yep, perfect DK.
Okay. Anything else, guys? I feel like, I mean, the system's pretty self-explanatory once you understand the basics of it. I think it works pretty well. You can test it back for yourself. One thing I did not go over is something that we've talked about previously, which are MA clouds and our MAs. I'm a big supporter of the 55 MA, the 50 MA, the 34 MA, the 13 MA. I really like those, especially the exponential ones. So I will usually turn on our 13 EMA, and then I will have our cloud at either 50-55 or 34-55. If I'm tracking short-term trend, I really like this range as a bounce reversal. I think it works just incredibly well. So I'm actually going to turn off our anchored VWAPs just to show you this with our system. Actually going to leave the red one on, this one on. But I think that for short-term stuff, I mean, like, it can't, like, this is our 13. It just works incredibly well to keep you in trend. And on pullbacks on a shorter period, like the 3-minute, like, you can get really great entries on little pushes into these. You'll know if you have strong trend if we're able to hold our 13. But on the 15-minute is where you can kind of see some really nice back tests, I guess, of our retracements off of our bigger moves. I mean, it catches almost always on an uptrend. Like, it catches just extraordinarily well, especially, I mean, it did it over and over again on SPY today. So if you can have both of these side by side, your 50 cloud works incredibly well. As you can see, it's doing a very good job keeping track with our VWAPs here. VWAPs a little bit faster though, and actually held our price. But I use this with the anchored VWAPs quite a bit. So if you ever see like a blue cloud on my chart, that's just 34-55.
Something that you can add if you're used to using the 55 is actually turn on your 50 EMA, and that will then give you your range when you're on your 3 minute. If you're used to using the 50-55 from our previous talks that we've had, you can then get a gauge of where that actually is, right? So inside the cloud, this would be your 50, and then you would have that range for major pullbacks compared to the 34, which is holding trend. But yep, so just another way to use it. I think Avery's already explained his system, but if he hasn't, he will most likely do a write up for the website in the indicator section.
Definitely, that's coming.
Is there anything else that you guys want to go over? I feel like Mario went over most of it yesterday, and today was just some basic stuff.
Yeah, I think a lot of this is going to be you guys getting your hands on it, and obviously for more than just a day. Then when you start to, like I keep talking about, like pattern recognition, we can go from there. If you guys find good setups, send us charts. If you can doodle on them a little bit and explain what you're seeing and why, that'd be awesome. What is
The 15 MA. Interesting.
Yeah,
Got
I'm
it.
sure the 15 works just
Yeah.
as well as the
Yeah.
13. Close enough. But yeah, we'll start now that it's out, we get it in your hands. Uh, I'm planning on trying to do either like quick 30-second long video examples or even just like Zig's awesome style where he does the just like write-ups on information. Forget what you call them. Like the
Infographics.
asset packs. Sure, graphics. It's a good word. Um, of just like different setups, right? But a lot of it is just like I keep saying, somewhat automating our already set system, right? Play the opening range break. Where's the daily open? Are we bouncing? Like, the anchored VWAPs is mainly the new kind of foreign, I'll call it, thing. But we've already shown kind of our favorite setups with it, right? Bounces of the green anchored VWAP, rejections of the red, and then big crossovers. Just basically just like an EMA strategy. Um,
Did you talk about your play that you do with the VWAP and the opening one, the opening anchored?
I didn't too much in terms of like crossing over.
Yeah, I figured. I thought that was one of those. Like you can kind of
Yeah, so
understand where
that's
trend is for the
something
day. Yeah.
for sure. Yeah, I don't think I've touched on that at all. So
Okay.
something that's helpful. And one of the reasons I've actually started running the blue anchored VWAP again. But you can see it with all of the anchored VWAPs is when we start getting crossovers. Um, especially blue crossing over red or under greens. Um, but on strong trend days, you'll see even, for example, if we're trending down really strongly and it's around that lunchtime and you're curious if like, I wonder this is about a time where like we'll see a bounce, right? Is the move done? Or are we going to have a full trend day, right? Basically on our drop based drop kind of setup. You'll see either if we're trending down, our green anchored VWAP, or if we're trending up, our red actually cross over normal VWAP, right? What does that tell you in like an auction market process? Well, anyone who had put that volume in up top, if it was buys, their average weighted price is beneath the fair value average weighted price. They're probably not going to re-engage long, right? It is an indication early on that we do have a trend day, right? Versus if we have a consolidation day, they'll act more like a band system. So a lot of people are familiar with the anchored VWAPs built into TradingView with the 1 standard deviation bands. I think on the higher time frames you can see about it. There's a pretty good one where we get the crossover under the blue, or like when they start to curl over and you can see it, Like it's confirming some of these moves. It looks much better on smaller time frames.
Yeah, sorry, I was
Yeah,
just
there you
switched
go.
for you.
But
can
you
always
can see
rotate
some of
with
these
it.
crossovers at points. It's not, I don't think, as strong as when Price does some of these flushes and crossovers, but it'll give you a short-term trend signal as well, where it's more of like a failsafe, right? So we have a ton of, the way I view it is there's just so many failsafes built into the system, right? Like, are we bouncing the VWAP? If yes, is the momentum candles printing in the direction of the bounce in your trading? If yes, is market sync? If yes, is Volt curling, right? So that's how I really view it, is like all of these fail safes, and we'll get into the patterns. Like I said, I want you guys to like have your hands on and try to identify some of them on your own more so than we've talked about. But some of these crossovers can really be strong. Even today, we had in our morning pump, I pointed it out in T2G2. We had a blue cross up above the red, and then on the flush, it comes back below. Right, so it's like, okay, I can feel long, I feel comfortable being long, and then it goes. Now trend has changed. I've now confirmed via a volume weighting, right, that we have a trend change. So I hope that didn't confuse people too much. Makes
Purple is
sense.
our standard VWAP, by the way. And then these are our anchored green, red, blue. Anytime you
And
get a
then
cross of like the VWAPs, the VWAP, our standard, over our anchored VWAPs, I mean, I think that's a pretty good signal. Or a cross.
yeah, I mean that's a great short too. We're right there. You're like, okay, we retested the mean. We had our opening range low to mean play. Will we continue?
Yep.
And it's like, well, our momentum shift from a green to a normal. Our VWAPs are all curling down. Our red came under our blue. We get the red test and we reject.
Yep, it's the
Right.
second one. This is exactly what I was
So
talking about before.
yeah.
This thing plays so well every time you see this setup happen. And it's just a waterfall down off of the retracement.
So a lot of, I
It's,
mean, same way as like when everyone listening was like first learning like how do I see a wedge? I can't see the wedges. And then you start drawing them and then you're like, "Oh, this is what a wedge looks like." Right? And then sometimes it starts to get a little more intuitive. Sometimes you don't have to draw them. You can see the pattern without having to line it out, right? Because you're understanding the compaction of price action. Very similar with these EMAs where it's like, okay, now I know this pattern, right? Here's a nice chop day, right, where everything is really tight, right? They're all trending together. Versus sometimes we'll see, right, them spread apart. Now we have motion, right? Market at rest, market in motion. What state are we in?
I mean, just like
Hopefully
how
that makes
beautiful is this just to stay in this downtrend? Like,
yeah.
it's so good.
And what were those settings again for the EMAs, Dapper? The numbers 13, 50, and what else?
I run the 5055 cloud. Sig's running a 13 EMA with a 3455.
Yeah.
Okay.
They're the exact same settings from the 5055 cloud. All I've done is I was using a 13, a 34 EMA, and then a 5055 cloud on that indicator. But I've just taken away the 50 and just I'm now running the 34 to 55 cloud instead to keep it less messy because the 50 and 55 are so close together. So I'm just able to now kind of catch things for retraces with the three leg. Seems to be working better than the 50-55 for me.
So the EMA number 2 is 34.
No, the first number of the cloud is 34. The second number is 55. The only EMA, a single EMA that I have on is the 13.
Okay. All right. Disregard that. All right. Thank you. Thanks.
Yep.
You can also run those all as EMAs if the cloud gets messy for you or personal preference or.
Yeah, I personally think the clouds are way less messy.
Same.
What I do for those is I keep doing this. I just need to double click. I keep forgetting. I turn off. I like put the opacity on the actual EMAs of the cloud to almost 0. Like usually it's even further down than this on my actual
I make
setup.
them completely
Yeah,
0.
and then I just have the fill on
Yep.
because I mean it does the same thing, and it's less lines on my chart. The better. That's the exact same reason why I also change these to circles, right? And then we change, oh, standard VWAP's always aligned though. And then I change that to a lower opacity, and then I just use the price lines. It just makes sense once you get used to it. Like it's very effective. Yep. And then these would be very low opacity. So like everything's just kind of out of the way, and I can focus on my intraday zones that I'm developing, or I've like already are drawn on my charts, and then you know, the price action itself. But just gonna keep going through a couple of these so we can see. And this is what you should be doing, is just going back and looking at how price interacts with these. And like, what does a trending day look like? What does it look like at the beginning of a day once all three VWAPs have formed? What does a reversal look like? What does breakout retest look like? Like once you start to get a feel for the indicator, I think that things become very easy. Just once you start to get some of these patterns down of like, oh, okay, like we're gonna have a strong uptrend in the day is when like this is also when these EMAs come in handy is when we're in a strong trend day. Our anchored VWAPs don't even catch up at that point. We're just playing them as a breakout strategy, right? So this is where having the 13 and 34.55 come in to keep up with that momentum. Hopefully, okay, yeah, see? So this is when I was talking about it as an opening range break, in a sense, a dynamic one, is we are playing the retrace to our mid, and then we are buying, we even have our orb here, but without this, you don't even need it, is you've got an opening range here, and you have a breakout retest and a push, and now we're just clinging on to our 30, or sorry, our 13 and our 34 EMA for the entire trend up, right? So that's why we included the EMAs for strong trend days. You don't want to get psyched out if even our VWAPs can't hold price with the waterfalls that we've been having lately. So that's when stuff like this comes into handy to keep you in that with our momentum candles. So that's why I personally use them. Right, like as soon as we get our break, push back down, and now we can just hold our 13 EMA. Beautiful. And we have our cloud acting as our resistance to keep us in trend after our second rejection and push down. So you've got your main entry, and then you have what keeps you in the trade, right? So that's kind of how I've always thought about the system, is I'm waiting for major rejections based off of our volume weighted averages that we've taken. Once we're below them, I'm looking for a retest, and then I'm using my MAs to keep me in the trade once we've fallen away. And that usually works pretty well. I mean, you can go back and back test it, but I mean, it's pretty apparent when we're having a choppy day or when we're in like a full-on trend day. Like you get very different anchored VWAP structures. But like on days like this where you've got a wide spread and everything's just kind of going your way, like this is what you want to see, is just you have a very solid trend. It's just going to continue up these large spreads to the upside. Same for the downside though. I'm trying to find some of our crazy days that we've had lately. I think I've already gone through them all.
Even that one looks really good there.
Yeah.
Where we tried, there's like this like bullish, like the bullish thrust into the green anchored VWAP and just like instantly shorted.
Yep. So if like we went to, oh, it's gonna revert me. I'm gonna do a higher time frame, but oh, okay, I can use the 15-minute candle. Oh no, it's only gonna do the last 10 candles. God, never mind.
Ooh, trading view.
I hate trading so much sometimes. But this is a good example of retracements of like, if you're thinking about it as like the opening range, right? You've got your mid band, so you've got your opening range mid, you have your retest spec to your high, and you've got your low, right? So on a pushback down, and we're holding, like this is just how I've been using it. It's basically like any sort of push from a high back to our mid, and then a push back up. Like you can then play every single one of these retracements back into this on an uptrend as like a pretty strong continuation, right? Like every test is going to find buyers, and you have some really nice moves that you can make just either scalping these or playing just the individual bounces from these retracements on a bullish push up. But I mean, honestly, the trade that I take the most, especially lately, is just that second touch of our red band. Because once the red crosses over our blue, I mean, you've got a pretty strong downtrend, right? Like if that's what's developing here, that means that we have already, because the blue is taking from the previous day. So if we're producing a blue line that starts above our red, like we've already gapped down or are in a strong downtrend. So what we're looking for in a setup like this, where we're rejecting our red, where our red's on the bottom, is we're looking for a continuation of that downtrend, right? Just to give you an understanding of, like this blue line is based off of the previous day. So if this is above, then you know that we're already in a pretty decent downtrend, and then we're looking for retracement, a retest, rejection, and continuation down.
This day you're
Oh,
that day
sorry.
you were on as well. No, that's like a good example of the sitting on an anchored VWAP into like attempted impulse move,
Yeah.
and then you get your flush, and we go right through all of the anchored VWAPs, target the red, and then boom, you can play. You like make your put play then, right? Doesn't
Yep.
matter that the move continued.
Yep. Yeah. Not
Right?
exact.
You say you hit your target and you take profits, and then okay, what's next?
Yep.
Well, I'm gonna look for a retrace to maybe re-enter puts. What do we get? Test red, flush, test red, enter puts, and then you get the next big move, right?
Yeah.
So this can be very systematic and objective if you take greed out of your vocabulary. Right?
Yes. Yes. And just look how it's playing with our opening range as well, right? So we're holding our our most bullish anchored VWAP, our top one, so our high VWAP, and we're holding below opening range mid. So what does that mean when we're looking at a 15-minute candle and price is holding the bottom half of that candle? What does that mean when price is holding the bottom half of our opening range break? Right? Like we're looking for a breakout of our inside bar or of our 15-minute period here. And if price is holding below, we don't have the strength of a breakout to the upside. We're getting just the minimal buying pressure needed to keep us within the range. But if the range is now exhausted, right, we're unable to push up. And now on our push up, we break over and we're unable to hold. And that's when you get that huge rejection to the downside. So it's like understanding where you are in relationship to your opening range breaks, or even your like a single 15-minute candle. And if we go to, so we were just doing this with measurements, but what we're looking for is just, this is the exact same setup as this, right? Like we're trying to hold we're trying to break over our range, and we're unable to break over, and then we reject and get our continuation, right? So we're trying to push. So think of all of the smaller time frames. You're getting price action that's below and consolidating below. You get a potential breakout above, buyers don't have the follow through, they don't hold the 0.5 for a push up, what you get is a rejection lower. Sorry, I can't make these prettier because TradingView won't let me. But like just think about it like that. It's like from a price action perspective, it's a very similar concept. So when I talk about a halfway back of a either an impulse or a 15-minute or even an opening range break, I'm using the same principles. We want price to be holding the 0.5 to 0.75 range on a continuation to the upside. Look what bullish price action looks like. Where did price hold on this candle? Right? Like it held the top of our range and then broke out. Where did price hold on this candle when we got our push up? Oh, wow, it held our halfway back and pushed up, right? We want consolidation on the top half, not the bottom half. That usually results in a push to the downside. So when you look at larger impulses, you apply the exact same stuff and same theory, I guess was the best word, as that. So we're looking for a breakout and we are looking for this consolidation to be taking place above this opening range mid and holding our mid as support, not opening range low. What'd you get? Oh, you got your monitor? Nice. Do we have any other questions or are we good to go? Just don't want this video to get too long as I'm recording it on OBS. Anything else you guys want me to look at? Any charts, any questions from your back testing that you're curious about? Any patterns that you've noticed? Concerns? This is your time. Use it wisely, you know?
I will say when things come up in the future, question wise, this obviously isn't like the only. We're going to be focusing on three-legged goose and whatnot quite
Yeah.
a bit. We can play back now. We can play the back testing game with it and whatnot
Yep.
moving forward. So
You just yeah, you did get pretty loud there. So,
I did.
yeah.
That's so weird. Why did I get super loud?
But if you guys have any questions, just let us know. I would rather take care of these as many as we can. Any concerns or questions or feedback that you guys have on these early stages, while we can still, you know, we can push out a V2 sooner than later if there is anything wrong with it. If you aren't understanding something, if there's material that you want us to cover more in depth that we haven't done a good enough job as of now, please let us know so that we can then make the content that you need and actually want to see. But and this is, I've just gone over basically how I use it, and I've been using it since basically December. So I've had a decent amount of time with it. Like I said, I'm just looking for this dynamic opening range break that follows price. And I'm looking for either the breakdown or the retests. These retests are just so nice. When you're already in a trend, it's just, they play so beautifully to the upside and to the downside.
Thanks, gentlemen. Appreciate all the help.
No
Definitely.
problem.
Thank you, Frank, for always asking like the questions during the day to give
Yeah.
us direction as well to answer. It's very helpful.
Very, very helpful.
Very, very, very helpful.
But yeah. Does this only work for SPY? Which component, Sammy? Three-leg goose works on everything. The only thing that won't work is your quad momentum candles if you were doing something on crypto or something like that. But everything else, every other component works just fine. And anything that uses after hours, your quad momentum candles aren't going to print because you need the market to be open for the internals to be functioning.
That's also why if you've been having issues and it's not working, you need to turn after hours off.
Yep. Should be pretty obvious though. Once you're switching in between.
Ooh, really quick. So when updates come out, and just regardless for health of TradingView, make sure when you're closing out of TradingView, instead of clicking the top X in the right corner, you click on your profile. See how Sig just clicked on his profile picture, and then at the bottom there's an exit, Control Shift Q. That is how you should be shutting down TradingView. Will very much help the health of your system running. I'm not sure why there's discrepancies. I have some theories, but I have nothing to back my theories up with. But there's your pro tip.
Well, you guys, while I have you here, for future updates, what you're gonna have to do, for this is just a TradingView problem. It's not on us. Every time we update an indicator, you're going to have to take it off of your chart, unfavorite it, and then refavorite it. So you're still will be in the system. So I've got 3-leg goose here. See, even if I unstar it, it's still going to be in my invite only because I'm on the whitelist. You want to turn that off. You want to take it off your chart, exit, and then every time this has worked for me, the only time that I actually have like a lot of success getting it to load instantly, the new version, is then hitting exit right after that. Then once I relaunch TradingView, I then go back in, I go back to invite only, I restar it, put it back on my chart, and then it should be updated. So just to cover that right now, while I've got you guys all here and we're talking about it, I've found the best way to update indicators.
So on this question, I think this is a good one. What strategy would you suggest to first use with 3-legged goose and tick plus? For the simplest strategy you could run with this is playing the opening range. Then, in my opinion, and then we can go into really paying attention to internals, right? And utilizing the momentum and market sync for getting into halfway back retraces. It just really simplifies your ability to find trend, but the opening range breaks will keep you in, or not keep you in, but will force you to execute on a solid set system that is objective. Like even look at Sig replay. If you want to take one trade a day that is high probability, high R&R, you don't have to think about your entry. We know where we enter. We enter below or above our lower high. Where do we take profit? We take profit at PT1. Guaranteed trades. So that's, in my opinion, something to look for. If you're not looking, or you can't trade at the beginning of the day, like within the first hour or so, then the strategy that I would suggest would be looking for rejections of your red anchored VWAP, second rejections, or bounces off of your green to the upside. Do you have anything else, Sig? Do you think it might be simpler?
If you're new,
then the most straightforward.
Yeah, I would definitely I would play opening range breaks, especially if you're new to the market or if your strategy by yourself has not been working. I think playing the 15-minute or a 30-minute opening range it's a really good strategy. I mean, it just works, right? Like it gives you the confirmation. It does a lot of that work for you because if we're breaking a range, then we know what we're looking for, which is just a breakout retest, and then you get your push. And then just using your MAs for confirmation as well as your quad momentum and your market sync, right? We're just, I mean, I don't have like a crazy trading strategy. I'm just literally using a ruler and putting a line on tick. That's my trading strategy. So I would say that if you're new to the market, new to the Discord, or new to the indicator without having watched any of my streams previously, that just playing the retests is the way to go. I mean, keep up with the opening range, use quad momentum to know if you should stay in the trade, or use tick for entries, watch your zero line. I think that's incredibly important, is watching tick for day trading. Gives you just way better entries, way better exits for scalps. And it'll also let you know when we start to curl, right? Got your oversold and overbought areas kind of marked. If you're thinking about it like an RSI,
your tops and your bottoms, the overextended areas, and then I would just be playing the breakouts. I mean, there's really no easier strategy than playing a breakout retest. And that's not. I need to clarify something because it seems like it gets lost in translation every time we talk about breakouts. Is you're not buying your call here. Right? You're not buying your call for an expected move above. Because this is what happens when you do that every time. We get a slight push up, you're up 5%, and then you're immediately down, 75%, and then 100%, right? Because you're trying to buy resistance. What we're looking for is for a retest and hold of that level that was resistance. You want it to now become support. Retest, and then you get your continuation. So you're buying on the retest of that opening range, or you're buying at your middle, right? So you're either buying, these are some easy setups. You're buying either the breakout and then push to opening range high, or to your first AVWAP if it's above, right? That'll be your first target. Or we're playing the breakdown retest to opening range low. So from above, breakdown, retest, continuation. Right? Like you're buying either of those directions if you're going to play the breakout, or if you didn't get in at the mid and you don't have a directional bias, then you're playing the breakdown retest for PT1. You're playing the breakout retest for PT1. Those are the only times you should be getting in plays, are off of the retests of what was resistance into a support, or a known support or demand level. Stop buying resistance. So that's all I would do. And you can confirm these signals by looking at your quad momentum, looking at what direction tick's going, and just keeping an eye, are we above or below zero? Is price able to hold above zero or no? Do you think, am I taking a call if I know that we've been rejecting zero over and over and over again and we can't close above? Or am I waiting for the rejection for a continuation down, So there are a lot of people that would be trying to buy and play into this and got absolutely wrecked here instead of just being able to get the continuation play, And you'll see that over and over again with these little spikes. But if you're watching tick, you know that you can stay within your short.
Sig, would you mind just sharing that real quick?
Share.
Believe it or not, just that. That's it.
Oh yeah. Let me make it a little nicer.
Once again, stress for opening range, we have a very built out presentation with examples of retests, invalidations, follow throughs. So exclamation point orb will get you to lots and lots of examples with walkthroughs. Well, if it doesn't hold the retest, then your entry has been invalidated, right, RPG? But we also know that if we're playing a retest and it invalidates, you get out.
Yep. Your plan's
right?
no longer valid.
Yeah, like I know some people who will say like, well, the mean. And I personally disagree with that because that is the next spot I'm looking for the bounce, right? That is our halfway retrace.
That's usually where I'm buying. Yeah.
Right? So you can set stuff up like that. I know Avery really favors it on sides. It's another way, in a way, I utilize it, where if it's around lunchtime or whatever, right when I get on voice, and I start, trying to call out plays, if we're trending above or below the opening range high, that's what I'm going to target for my position, right? So if we flush right away on the opening range low and we're staying underneath it, I'm going to be looking to target shorts because I know that sellers are in control of that day, right? Initial bounce broken. We know who's in control. Same idea on the upside. It'll be looking to target longs until some, another signal invalidates said thesis. But that is what trend is, right? Continuation of a one-sided trade. So on one-way trade days can really be helpful. But I will keep stressing, we have lots and lots of examples, especially in that orb presentation. And Ty brought it up earlier, our futures live trading where we only trade halfway backs. And there's some examples in there of like a good place to put a stop, a bad place to put a stop. We eat some good stops. We have some good stop placements based on pivots, and opening ranges as well. Obviously focused on halfway backs, but check that out if you want live examples. As well as just really be proactive in thinking during voice and live and what Sig and I are saying and streaming, because I think a lot of these questions can be answered via you guys like hands-on learning, right? Because at the end of the day, you now have the tools to get all of our price targets. This is how we create our price targets, right? You now are looking at the same thing we're seeing. Does TOS dome volume repopulate in real time? What do you mean by that, Ty? I think the answer is yes. Yep. Oh, well, I was saying yes to the options. You can see how many people run. Okay. Yeah. Yeah, and that is I was actually talking to I think it was Kevin about this last night. Webull only pulls volume data through NASDAQ. I did not confirm that, but I believe that is true. Okay. So when we're executing through different exchanges, if they're not pulling that volume data, it's not going to be there, right? It's very because me and Kevin last night we were comparing even like a time based just normal chart of SPY to the trading view had wildly different volume
Yeah,
metrics.
that makes sense. Yeah, you're only getting it from one exchange.
Yeah, what was peculiar is the Webull was reporting more.
Huh.
That's what I said. So but anyways, it's just something to note. And we've kind of like also I guess seen and confirmed this because VWAP was having trouble with his VWAP on Webull, right? And what were some other issues? We know people from TOS to TradingView because they're taking in how they're storing cumulative volume data. You can sometimes have slightly different POCs and value areas. We can even see that within TradingView between the HD version and the normal, right? So
Yeah, and time frame.
yeah. So all these charting platforms and brokerage accounts are taking in and storing volume slightly differently, but with Webull, your biggest problem is they're not getting full exchanges, right? And that's I don't know if people saw. There was a couple of questions last night of running these indicators with the free version of TradingView and data packages with that. So regardless of your version of TradingView, you're going to get the standard data package. I highly recommend getting the additional data packages for ARCA, NYSE. I think Nasdaq is the other one, and there is an OTC package as well. But it'll just give you a more complete volume input and will help some of your candles. Not required at all. Not anywhere close to required. but definitely recommended. So
Awesome time. Oh well,
that's
I'm not about the
6 days.
blowing up, but I'm glad that this was helpful and made you consider getting it. Hopefully it
Oh, he's been
helps.
blowing up Weeble for weeks.
Oh, Weeble. Okay, so like don't want that to be taken wrong. But yeah, seriously,
You
guys,
gotta
if you
get
have
a
any
hold of Ty.
questions, please, 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 just ask us. Don't be afraid. Don't be embarrassed. Like, there's no shame. All we want to do is teach you. And if you guys are missing out on the basics and too scared to ask at this point, like, you're doing more harm than the short-term embarrassment will be, right? Like, you're really hurting yourself and probably others because I'm sure other people are in the exact same place. Just like
Definitely.
on any of these classes where we like barely have any questions, and then for the next 5 weeks we have questions nonstop. Just like, what's the deal? But if you guys think of anything, please let us know so we can cover it. If you think that any graphics would be good, like I didn't know that you guys wanted a breakdown retests graphic. If you guys want me to make things like this, if you have any suggestions, I can make them. You just have to let me know. I will do my
You
best
wanna,
to get around.
you wanna just pull up the spy for today really quick
Yeah, that's what we're on.
with candles?
Oh, really?
Okay. Zoom out a little bit. Even a little bit more to see. Okay. Why did I have the 399 half target? Right. Well, it was right below the open, but look at what happened when we tested that zone previously. Once we pushed through it, we come down, test wick, right? What are these bottom wicks telling us? Strong demand there, right? There's liquidity. There are active buyers there, right? Come down, retest wicks, active buyers, rip out, right? We just rip face off that level. So, is it smart and statistically probable that if we sell off back to that level, it's probably a zone where we will find buyers again? Based on the aggressiveness of buyers there previously? I would say yes. Right? Did that level play to the penny extremely hard essentially today? Yeah. Is that always the case? No, of course not. Right? And what was I calling out on voice with these puts? Where did I take my core off? And where did I take my first set of runners off? Daily open, right? I took core off on this first tested daily open. And then I remember specifically saying when we retested daily open, I'm taking more off here just in case, right? Because I didn't know if we were going to lose that level or not. And I'm going to take my, like, more of my position off on the flush down. We're coming right into the end of the day. I'm in degen 0 DTEs out of the money because I don't have a brain, right? And, like, I'm going to take my profits there.
Yeah.
Now, did we get the flush? Yeah. Did I exit the rest of mine? Yeah. Do I care if we come back down to that open range low? No, I don't care at all. Right? This is the play. Played the play. So if we flushed below that level, right, this 399 half, then what am I looking for? I'm looking for a retest of it and a rejection, right? If we had more time in the day in this scenario specifically, but if we can come back, if we come underneath it and then retest to the upside and reject, that's another good confirmation that you can get into a put, right? I would look for a re-entry there. But if I have a known level where buyers were extremely active, right, and we're coming back far down to retrace to that, I'm gonna assume that they're gonna protect their position, right? Or they're gonna still be sitting there, which are kind of the same thing. Or three, at this time of the day after that sell, that's probably where the short cover is gonna be. Right? We can also see on the volume profile a little bit. That's like right basically the level before we get into that low volume node, right? Last little like hardcore shelf taper before we really fall off. So once again, that's telling me, okay, there is activity here that is substantial. I'm going to respect that. as a trader. I'm not going to try to go in with a mindset that I know more. I'm just going to see the level, identify that's active demand, and sell there because I'm not playing those games, right?
Yep.
So
I
it's
mean,
not rocket scientist.
yeah,
It wasn't magic or voodoo. I just
just
drew a line.
just look left.
Yeah,
Yeah.
exactly.
It's always like when in doubt, just look left. Like you gotta like this right here. We've already gone over these, but this is even a smaller time frame. But you can see what price is doing here, right? You've got that rally base rally even on a 3, but like this whole section right here is just a base that's forming, right? So like this is support. This is where demand is, and we've yet to retest this, right? Like there's an imbalance here still, just like there was an imbalance here previously. And where did we fill? We filled the imbalance and then we pushed.
But if I can stress one thing, because Sig said this, I believe, last week, or maybe he typed it out. I truly believe that for especially those who've been around for a while, your technical knowledge and your ability to see some of these technical setups are good and pretty concrete. The key is trusting them and not being greedy. Right?
Yeah.
When you see that flush, is it easy to think, maybe this will continue down and break opening range low? Yeah, of course, right? Am I going to take that risk at this time of the day? No. Nope. I'm going to sell at my level. If that means I sold early, don't care, made money. Play and played. It's my thesis. Playing the thesis. No greed, right? And granted, this move was sick. Like, really. On the flush down. So, but there's no need to be greedy. Zero need to be greedy. Cannot stress it enough.
Look for structures like this. It doesn't have to be a single candle. It's going to be an impulse up and then sideways price action and then an impulse up. What you're looking for is the area where price is held, consolidated, or retested a halfway to push back. What you are looking for really on moves like this with a singular candle is a strong move outside of this area as quick as possible. We're looking for thin candles, thin price action, where we don't have tons of sideways consolidation, but a big move out of that area that never gets retested. And that creates an imbalance. That's what we're looking for. Is when you have a strong push down and then all of a sudden put price spikes up and is just gone, right? So like a pennant breaks, goes down, 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 and then we get our push up just like we did right here, right? Like we get this push down and then a huge move back up, like buyers have stepped in and all of a sudden buying's back on, right? But when we get these strong moves up without building the structure to maintain structure to go along with it, those create imbalances that need to be filled in the market. So you can't just go up all the time. So you have sellers who will step in and sell down until buyers want to buy. Right? Like there's a point in the market where people are like, "Nah, that's too expensive. I don't want to buy that." Or they're like, "Oh, okay, I made a lot of money. I'm selling." And then if there's no one who wants to buy, the price is going to go down until there's a level where someone wants to buy. But you get an imbalance because you have an area that moved or price moved out of it too quickly, and all of the liquidity that was there or the lack of liquidity. Now, when we come back to it, those people who were unable to get filled the first time we were in that area are going to then buy the second time we were there because we pushed out of this area so quickly. Not everyone who wanted to get filled was able to get filled. Not everyone who wanted to sell at the top, they were unable to sell their full size, or they weren't there at the time, or they didn't have anything on the book, right? So when we push up into these areas and then sell off very quickly, that means that there's not that many people who can get their orders filled. So when we come back up, you get selling again right in the exact same area. That's all this is. So we're just playing imbalances of price. when someone large is coming in and they're not looking at an intraday time frame, but they're a larger time frame trader, right? They are buying in bulk and don't care about the 5 cent range that price is going to go because they're in it for a year. They're in it for 10 years, right? They think this is a good value buy for the longer term. And what happens when those larger blocks come through is that there isn't enough liquidity on the book, and it's going to push prices because there's a limited amount of people who are willing to sell at 530 exactly, right? So then you have to go up the ladder to the next available price where there are sellers. Then you go up the ladder to the next area where there are sellers. So if you have a large order that's trying to get filled all at once, it creates an imbalance in price. There aren't enough sellers to fill your price at the level that you wanted, right? So we then push through and we gap up. But because there were more people that want to sell or buy at that price level, we're going to come back down because this market structure is messed up. There isn't enough volume there, right? Or there's a lot of volume here, but we pushed out of that area. So all the way down are buying opportunities. And then this is a known level where a larger buyer is. And it just depends on the setup. But that's what we're talking about when we talk about imbalances, stuff like that. This is why we can find supply and demand levels based off of stuff like this, or we can find levels if we go to, even a 5-minute, where is price holding? When we go sideways, what is that telling us? If we have a push down and then sideways price action and then a push down again, where do you think resistance is going to be when we come back into this range? Look at where your shelf is. Look at where our shelf is here. When we push down, it's very thin. And then when we go sideways, it gets, we're building a volume shelf. That's why we play those nodes. All kind of coming together. Everything's just the same thing. Just a different, everything we teach is sorry, I said that wrong. The volume profiles, the halfway backs, everything kind of plays into each other and follow the same rules.
Yes. It's like in kindergarten you learn 2 + 2 = 4, and then in first grade you kind of learn why, and then all of a sudden you learn that 2 × 2 = 4.
Yes.
And all of a sudden you realize that 8 divided by 2 = 4. We're just still solving for 4 at the end of the day.
Price and volume that's it. That's all this is.
Yep.
So if we have different ways of looking at that, then we have multiple strategies that we've learned are coming together at an exact point or an area. You've got more confluence and more confidence when you're going and testing that area. So the things that we've taught you are just visual aids to see the price action that's on your screen. That's all we're doing. So if our halfway back and our supply and demands are in the same place, if our halfway back and our MAs are in the same place, if our volume shelf and our supply and demand zones in the same place, anything like that where you have multiple techniques that you've learned that are coming together to tell you the same information, that should be a higher confidence area where you can take an entry. But at the end of the day, we're just looking at price and volume.
Cool. Anything else, guys?
Seems like that's it. So I'm going to stop recording. Wonder how much space this is taking up already. And then I will trim this video and then put it up on YouTube. Need more just like what you went over. Which part, Bulldog, so I can make stuff for you? Joyful, we have some really great videos on it that I think would be very helpful. We've got some really great videos on volume profiles. We have a video on
supply and demand. We have support and resistance zones. Just wait, what's the YouTube link? Okay, everything should be linked in the two things that Dapper just put up.
I'm putting there's so much stuff, guys. Oh, lessons now brings you here as well. Interesting. So the volume 1 and volume 2 commands bring you to full volume profile and analysis. Of course, volume analysis 2.0 we talk more outside of just volume profiles. We get like time segmented volume a little bit, and I think we might talk about on balance volume.
Maybe.
We definitely talk about delta
Our
differences.
if you want to see live examples, I think that our first futures trading class session that we did, where we just Mario and I are just narrating the price action and taking trades, is a very very good visual aid if that's how you learn. Because we're going over halfway backs, we're going over volume, we're going over divergence. We're explaining our thought process of why we're willing to stay into a position, or why we exited, or why Mario made us have an 80% win rate instead of 100. Go into all of
True.
that.
And it's the answer for most things. I was lazy. I didn't move the stop.
All of that is covered and more. It's a really solid couple. I think it's like an hour and a half or something. I don't know, but
I
we just
also want
trade a full
to,
day.
if people don't spend a lot of time like learning content via like YouTube or Twitch videos, there is this awesome thing called put it on 2 times speed, and
Yes.
especially for like live training class, like man, turn that thing on 2 times speed and just watch.
Yeah, we definitely cover some of like the order block, 'cause it's like all delta by price and all of that stuff is all in a very similar realm. The order block stuff, or the supply and demand levels. What class did I cover that? Was that it was more recent?
I mean, I can go find stuff. The problem is we cover this in everything. I
Yeah,
actually brought this up the other day when someone, I think it was Rory, was asking about imbalances. And like we're teaching you this stuff, we're just not using we're building on terms.
yeah,
Like we were talking about earlier, like 2 plus 2, 2 times 2, 8 divided by 2. It's like oh we're solving for the same thing. Um
yeah. Like we're just trying to slowly push the vernacular, the market vernacular, like
yeah.
the market vernacular into your head without trying to overwhelm you. So slowly building up on concepts, and then you'll notice that like Mario and I will start using a new phrase, right? Like we're now like trying to then slowly work them in without just like loading it all on top. So yeah,
You have this really good setup with how to plot and trade ranges.
I should remake that video.
Yeah, so there's
But I mean, it's
this,
still
and then
good.
like there's uh, you can check out this SNR. It's an article I wrote um that is showing you how to like find these zones without telling you what these zones are. Right, where we're looking at an hourly chart and we're drawing boxes on wicks. Well, why are there wicks? Because there is an imbalance of demand there, right? So it's like, you know, builds on everything, like Sig was saying.
Yep. Yeah, man, like that's you can look up imbalances, you can look up fair value gap, you can look up all of these different things, and then it's just going to talk. It's just market structure and volume, and it's price action. They're all just components of the same thing, and we're teaching a lot of these concepts without using the actual words, or not using the full concept, but getting to the same exact points. So there's so much to learn, so much to know.
Cool. Anything else you guys need out of us? You won't hear any Wyckoff stuff from us. Can promise you that.
The only Wyckoff you'll hear from us is accumulation and distribution.
True.
That is the only Wyckoff phrases.
Call that Wyckoff.
Yeah.
Terms we're giving that guy the credit.
I don't really know. Yeah.
Spring.
Other than that, we don't. Mario and I don't really touch that stuff.
No.
Just follow the price action. I mean, it's not saying that it's bad, Joyful. I just think that the problem with things like that and with Elliott waves is that there's a human component in it, and you will get very different results compared to someone else. And if you measure something wrong, if your start is wrong, then your entire model's wrong. Right? Just like with waves, like your overall structure is going to be wrong if you. That's why there's 35 different counts on SPY if you just search Elliott wave. Just like when everyone thought Bitcoin was in a Wyckoff distribution, and then the next day they changed their chart, and then a month later they changed their chart. It's like the model keeps changing. It either fits or it doesn't, you know? All I know is that I use a ruler and it bounces on the 0.5.
That's basically it.
Hey, you need to know.
What else? Like something Sig and I focus on is reactionary setups
Yeah.
versus predictive setups.
Yes.
And there's nothing wrong with a predictive setup. But once again, we're literally just saying the same thing,
Yeah.
right? As what Sig just talked about is like we are reacting to a change, right? Within a construct versus predicting where that reaction will bring us or occur.
Yeah, the only predicting I do is by drawing supply and demand levels.
Yes.
And that is a educated prediction
I will
based off
play
of
it
volume and price action.
shelf.
Yeah. That's the only predicting I do. Other than that, I'm aware that I do not have the the liquidity to influence the market, and so I am following someone else. So I say it like almost every lesson. My job is to find where the whales and the larger players in the market are going to find value and to get in with them and ride up the trend or sell when they sell, right? So that's my job. It's to buy when they buy and sell when they sell. Or know when they're going to, right? Like sell before them. We know we're going into a supply, I'm going to sell. But that's how Mario and I trade. It's just, it seems to have a higher success rate. Personally.
Objective. You
It's,
don't have to
it's very
think.
objective. Yes.
Just you play A to B and you carry on with your day.
Yes. You don't get in an argument. You don't have to have beef on Twitter. You just play the market. Ugh.
My beef on Twitter is when Dubs doesn't like enough e-girl photos and I'm lost. It's the only Twitter beef I got.
Lack of e-girl liquidity on your Twitter feed.
Seriously. Seriously.
When you're using the price target from previous days, high, low, when we have breakdown at Morale. Yeah, usually I'm using, we'd have like a volume profile on, and your most important levels are going to be, so if we turn off everything else, you can see that this is our value high, our value low, and our POC. So you can see value low, value high, POC. So we can use these levels as levels of potential support and resistance, right? Like these are going to be levels where we have some contention before a push up. And if we're unable to hold, right, like, so like a previous high is definitely worthwhile watching, as well as your value high and low, as well as your POC. I think those are all definitely worth watching. Like, where do we reject, right? POC. And they have a lot of importance when we're looking at clumps of them, right? Like that's more clumped together. You can just use your side profile and see what that's doing, right? We've got this giant shelf that we're hitting our heads on. And you've got untested POCs like this. Like these are usually my PTs, to be honest, where we've never come back to this price. So literally everyone here
is bag holding. So when we push back up to this price, there's going to be selling because they're getting out of that position. There are going to be people taking profit that are going up into it. But this is like a high volume area where everyone is a bag holder above. And we've never gone back to retest this price point. And it was the highest volume traded for that day. And then we have an accumulation of them, right? Like this is a lot of POCs in one area. So this is going to be a heavy point of contention when we push back up eventually. And you can see that on our volume shelf on the side. Huge low volume node and then larger volume nodes on the side. So stuff like that I think are very useful. Daily open I think is a very strong level, as well as high and low of previous day. All pretty solid levels. You take risk off or put risk on, depending on which side we're on. You got
Timed out of TeamViewer.
Oh, my free session was ended on TeamViewer.
That's never happened before.
Yeah, we're not even doing that long of a session, so it's weird.
Very
But-
weird.
All right, I'm going to close it. At least the recording, because we're now just ranting.
Yeah.